Hello, this is Pat Walker at MissionWinners.com, and I'm doing a training, educational, instruction video for folks. My background's in teaching. Years ago, I taught on the university level. Love teaching, been an IBD meetup co-leader for over 10 years, and have taught investors daily classes, in St. Louis, meetup classes. Love it, love it. Love trying to speed up the learning curve for people. So let's do something here. I want to go through and we're going to talk about right here, Micron technology. Has a cup-shaped base. Cup-shaped bases have a higher failure rate, and I told VIP members this, which is why we didn't buy Micron technology. Before it broke out, I said don't do it. I want to explain why, and this is important. Something we have to do is you have to get into investors' heads. I want you to think about this. The stock runs up in price and it hits this high right here on this bar. There were people that bought it here and sold it. Do you think there were some people that bought it up here that did not sell it? Think about this. Charts are a reflection of investor emotions. Emotions relate to psychology. I have a degree in psychology, and so what do we want to do? We want to analyze people's emotions, which are reflected in the chart. So the people that bought it, and some people bought it here and they sold it for a profit. Some people bought it down here and sold it for a profit. Some people sold it up here. Some got probably near the top, and that's an ego game. But, some people did. Do you think there were people buying it up here? Yes, of course they were. How do I know this? There was so much pent-up emotion, it gapped up. There were buyers up here. There were buyers. Now, then it starts to fall. Do you think there's a possibility that there were people that bought this stock here and didn't sell it as it dropped? Well, of course. There's always people that hang on. Oh, I'll sell it when it comes back. It's okay. I'm a value person. There's value in Micron technology. I'll wait. So there were people that bought the stock for $62, $63 a share, and they watched it drop. And then they watched it go back up, and then they watched it drop and come down here to around 46 bucks. 62 minus 46, how much is that, folks? $16? 16 bucks? That's a trip to the bank. They're down, they're going, oh my gosh, what am I going to do? Well, then guess what happens? It turns and it starts going back up in price. Now let's talk about investor emotions. You bought the stock here at 62 bucks, and you see it down here at 46 bucks, and you're down $16, it turns and starts going up. Who's buying it? Well, there's people buying it. People that maybe bought it here and they bought more. And it runs up and it grinds up and it approaches the old highs. Think about investor psychology. The person who bought the stock at 62 and watch it fall to 46 and then watch it comes back up to 62, what are they thinking? Oh boy, this is great. We'll just own it forever. Everything's going to be great. No, you know what they're thinking? Hey, I was getting my butt kicked down here. The next time this gets close to my price, you know what I'm going to do? What do they think, folks? Seriously, what do they think? I'm going to sell. Thank God I'm at break even. I'm selling. That is the epitome of the definition from a psychological perspective of the double top formation. Bought it here, get kicked, runs back up, they get close to break even, and they're selling. Who else is selling? You think it's just the people that bought it up here? No, do you think there are people that bought it down here that have a good profit? Sure. You know what they're thinking? Because they're not stupid. They're sitting there going, well, the stock ran, I bought the stock at 48 bucks. It's starting to go up. This is great. By God, I got a feeling there's people that bought it over here. If it gets close to that price, geez, I bet they're going to sell. You know what? You're darn right they are. So you've got people that bought it here that got their butts spanked and watch it come back up. They sell. Who else sells? People that picked up some down here and they have a decent profit. So you have two different groups that are selling. What does it do? This day, it gaps up, it runs up, and everybody's like, oh, this is great, this is it. And then it reverses down on a pickup in volume. People are going, oh boy, this is bad. I was telling the VIP members, don't buy this. This double top pattern has a higher failure rate. It's a cup-shaped base. Cup-shaped bases have higher failure rates than cups with handles. Runs up, reverses down on a pickup in volume. And then today, they spank it on down again, just like that. Now, what's it going to do next? I don't know the future. All I know is what happened here. This, the cup-shaped base, the cup and handle, these are all charts that are reflections of people's emotions. The emotions of greed, the emotions of fear, the emotion of relief when you can get the heck out for near break even. And they panicked out even and they hit the road. There you go. That's why you got to be careful with cup formations without handles, and you got to be careful with double top formations. And that's also why I told VIP members not to buy this. Stay away. And that's the way it works, gang. I just wanted to explain that to you. Again, charts are a reflection of people's emotions. Emotions are related to psychology. When we start thinking that way, all of a sudden, the patterns start making sense. And I thank you very much, and I hope it helps you.